Andrew Holland is joining us, Chief Executive Officer at Avendus Alternate Strategies. Andrew, good to have you with us here. Thank you very much for your time. How are you placed, Andrew? End of last week, we saw a bit of a wobble, but yesterday's mid-cap and small-cap outperformance, this morning, the start that we have. Generally, I don't think there's very much reason to be very negative. You can feel a little uncomfortable about the pace of the move. Some of the technical, if you look at some quant and technical indicators, there have been some divergences, etc. Things like RSIs have been very elevated, but that's part of parcel. But what do you make of it near term?
Near term, it's I think we're all complacent. To be honest, I think I've been more constructive on the market. So please, I'm not trying to be overly negative here at the moment. But that was based on a number of factors. One, that the Fed, having gone on pause, would look to reduce rates by the end of the year. RBI had the opportunity to reduce rates in October because I think Asia has that opportunity, given commodity prices are falling. So, if that's your base case, then that's just been, maybe delayed somewhat because of what the Federal Reserve has said, what the Bank of England is doing, what's happening in Europe. But we're all looking at those Goldilocks scenarios that it's okay, and I'm not sure it is. So I'm just wondering if this complacency is just a little bit worrying in that there's nothing that we're seeing any untoward or kind of unintended consequences of keeping rates higher for longer. I think that's going to, that's something that just worries me in the very short term. But if markets do fall, then I'd be buyer on those dips. But I just feel that markets look globally a bit tired with no real catalyst, and the only real catalyst is either higher rates and slowing growth as we're seeing in Europe.
Is there a risk that the U.S. markets don't do anything at all? The rally up until now was driven by those magnificent 7 stocks, the technology stocks, and you are seeing signs of fatigue emerging there. And you've got a couple of downgrades as well. So even the sell-side analysts are not very constructive on these tech stocks after the kind of rally. Goldman Sachs yesterday downgraded Tesla. They say the stock has run up 108% on a year-to-date basis. You had UBS, which downgraded Alphabet, and they're saying that, well, all these benefits from generative AI is going to take some time, and they see limited upside from current levels. So UBS downgraded Alphabet. So if these tech stocks, which drove the rally up until now, are showing some signs of fatigue, do you think there is a possibility that the U.S. stocks either stay at these levels or perhaps decline?
No, it's a great point you make, and if you kind of think about the fact that the market has there been driven by 7 to 10 stocks, and the underlying market below that is virtually kind of flat to down. If you look at the Russell 2000, and if the economy is falling, so if these stocks were not there to hold the market up and they start falling, there's nothing underneath it. Really, underneath those 7 to 10 stocks to stop the markets from falling, because obviously, the banking sector would kind of would take a bit of a hit because of the recession and higher rates. So all of these factors, could be reversed from the positives that we've seen over the last 3 months. I think one of the interesting things is that, and I've said it too, and so happy to be wrong, is that we've expected this market to be kind of volatile. Because of all the different events that we've been seeing, but it hasn't really been, the volatility's not been there. So, given, as I said, the complacency where it is, the VIX where it is, both here and in the US, then maybe there's something to shake that complacency at some point, whether it's this week, next week, or in a month's time. We'll have to wait and see. But I still think that's the main factor that's worrying me. But you're right. Without those 7 to 10 stocks, I think the markets in the US would be a lot lower than they are today.
Hi, Andrew. Good morning. Nigel on this side. Andrew, how have you changed your positioning with regard to the long-short ratio? Have you tweaked it a little bit post this recent run?
Yeah, no, we've been fortunately been very flexible in the way we've been trying to kind of maneuver around the kind of what I would say is really a flat market. It's not as though we're racing ahead. I mean, the market's at what 1% this month so far. and 4% for the year. So it's not, it's really the action's been in the small and mid caps, and the underlying themes which we talked about many times, which is where you're going to make the most money. It's not going to be for the index at the moment.
Andrew, what about a couple of themes that you have liked? Defense as well as renewables. We'll have a chat with one of the defense makers in the next few minutes as well. How much of that good news has played out? You've been positive, I think, on both those two spaces. Do you think that it's time for some consolidation, though these stories continue to look good for the next few years?
But it's not a couple of years. I think it's the next 5 to 10 years. So yes, you will get times when some of those stocks will have their pause in terms of just take into account that ratings or valuations have moved a little bit ahead of expectations in the short term. The problem I find on the defence sector, and it's something which doesn't help in terms of valuing companies, is that the orders are very lumpy and you'll never know when they're going to come in. But obviously, my view, this is over the next 2 to 3 years is going to be two sectors which will continue to race ahead, and therefore you need to be involved in some of those stocks, although it's limited on the defence side.
Just a few names I want to highlight from the broader market in terms of what's happening. Look at HDFC Life. It's the top volume traded gainer across the board. So it's coming up with about a 3.5% gain at this point in time. Look at, there you go, on your screen. ICICI Pru, of course, is the other one where CLSA has put out a call. They think they've upped their target price quite aggressively. So that's the other one. Stocks in the recent past have done well. Look at MRPL, which is up about 3.5%. Stocks at about, 80 rupees, coming up with large volumes. BLS is up about 3%. That's the passport services company. So almost 200. Sapphire Foods is up 1.5%. We highlighted that. Amrutanjan is coming up with a 11% gain. Usually doesn't come up at all, but big volumes in that one. Look at that, 2 lakh shares on the NSE, and 11% move. KPI Green continues its extraordinary run. Saregama has been very strong last couple of days. Saregama is up another 2% or so. You've got Railtel, which is up 4%. Thyrocare is up 5%. Some of these diagnostic companies yesterday popped up, Metropolis, etc. Equitas Bank is up about 3%, 3.5%, and MGL is up about 3% as well. So this is, the broader universe. Market breadth is exceedingly positive. Some 5:1 in favor of advances is what we have. ICICI Securities is down 2%. The stock ended off the highs, but still very strong yesterday. The delisting was the trigger. 2% lower right now. And Mazgaon Dock, which shot up, is down 1%. Small pullback. We were talking about Parag Milk as another one. It's down 2% this morning at about 135 or so. HCC was another big mover from yesterday. That's down about 1.25%. Rima, so it's on the broader market, overwhelmingly positive kind of start.
Andrew, any other sector that you are keeping on your watch list where you think tailwinds are emerging or they are getting to attractive valuations? You've still not dipped your toes in it, but you are pretty close to evaluating a buy call. Are there any sectors like that on your watch list right now?
4 or 5 months ago was obviously the kind of more kind of new age companies, the kind of Paytms of this world, Nikes, but we did some homework on that, and some of them have actually kind of moved ahead quite well. I think for a number of them, though, there's still a lot of competition just emerging. So it's something which I still feel it's not apart from one company which I can't name, apart from one company which is now becoming more profitable. I think the others have a more intense competition, which is worrying me. So, but no new themes. I think the themes that we have are plenty enough to make money in. I think the only one which I'm still kind of grappling with in terms of finding the kind of stocks in what I would call kind of be able to invest heavily is the electronics industry, and I think that's something which I will continue to monitor to see who else is moving into this industry over the next 1 year, because that's where I think you're going to make a lot of money, both because those companies will have huge revenues both domestically and from export. So that's a sector which I want to get into. I'm just finding it difficult to find the right companies.
Okay, all right. Well, thanks a lot, Andrew, for stopping by and filling us in with your take on the markets and individual sectors. Looking forward to having a chat with you in the near future. Wishing you a good day as well.